You spent at least 12 years in school. Math, science, history, the water cycle, the mitochondria being the powerhouse of the cell. For some reason, you still remember that one. But somehow, in all those years, in all those classrooms, nobody sat you down and explained how a credit score works. Nobody explained what compound interest actually does to your life. Nobody explained the difference between an asset and a liability. Two words that determine whether you end up wealthy or end up working until you're 70. You think that was an accident? I don't. And by the end of this video, you're going to understand exactly why this information was kept simple, kept vague, kept out of your hands for as long as possible, and what you can do about it starting today. Let's talk about what you actually learned. You learned the Pythagorean theorem. You learned how to diagram a sentence. You learned the capital of countries you'll probably never visit. You learned dates of wars fought by people who've been dead for centuries. All of that has some value. I'm not saying burn the textbooks.
But here's what's strange. You spent 0 required hours learning how taxes work, 0 hours learning how insurance works, 0 hours learning what happens when you only pay the minimum on a credit card, 0 hours learning what an interest rate actually compounds into over 20 years. You graduated knowing the year the Magna Carta was signed and having no idea how to read a pay stub. And somehow, that gap didn't seem to bother anyone in charge of designing the curriculum. Funny how that works. Now, you could chalk this up to bureaucracy, old systems, nobody updating the curriculum since 1962. And sure, that's part of it. But there's a deeper reason, a more useful one. Because once you understand why this gap exists, you'll never look at your own financial decisions the same way again. Here's the uncomfortable truth. A financially confused population is a profitable population. Think about who actually benefits when you don't understand money. Credit card companies benefit when you don't understand how interest compounds, because confused people carry balances, and balances generate billions in interest payments every single year. Insurance companies benefit when you don't understand what you're actually covered for, because confusion means you either overpay for things you don't need or get caught without coverage you do need. Retailers benefit when you don't understand the psychology of spending, because confused spenders buy on impulse, not on plan. None of this requires a conspiracy. Nobody needs a secret meeting in a smoke-filled room. It's simpler and somehow more unsettling than that. The system doesn't need to actively hide this information from you. It just needs you to never be taught it. Passive ignorance does the same job as active deception, and it's a lot easier to maintain. Schools are funded and structured by systems that have never had a strong incentive to produce a financially fluent population. Standardized tests don't ask about Roth IRAs. College admissions don't care if you understand amortization. So the curriculum optimizes for what it's measured on, and financial literacy was never on that list. Meanwhile, every single day, you are bombarded by institutions that have every incentive to make sure you stay confused just long enough to make a decision that benefits them instead of you. You're not bad with money. You were never given the manual, and the people who left you without it were not your enemies. They just had different priorities than your bank account. And honestly, this is just one piece of it. I ended up putting everything I know about how this system actually works, all 16 pieces of it, into one place. It's called the Complete Wealth Bible. The Financial Literacy Fundamentals section alone breaks down way more than what I'm covering today. Links on screen if you want the rest. Anyway, if nobody is going to teach you this, and at this point you should assume nobody will, the only logical move left is to teach yourself. And the good news is, the actual concepts you need aren't complicated. They were just never explained in plain language. So let's fix that right now. This is the most powerful force in personal finance, and most people only understand it as something vague that happens in a savings account. Here's what it actually means.
Compound interest is interest earning interest. You don't just grow your original amount, you grow the growth itself. $1,000 at 7% annual return becomes $1,070 after year one. But in year two, you're not earning 7% on $1,000 anymore. You're earning 7% on $1,070. Small difference at first, massive difference over 20 years. This cuts both ways. It builds your wealth when you invest. It destroys your finances when you carry credit card debt, because that debt compounds against you in exactly the same mathematical way it would compound for you in an investment account.
Concept 2. Assets versus liabilities. An asset puts money into your pocket. A liability takes money out of your pocket. That's the entire definition. It sounds simple because it is simple, but almost nobody applies it correctly to their own life. Your car is very likely a liability. It loses value, it costs insurance, gas, maintenance. Money flows out, not in. Your primary home is more complicated than people think. It costs property tax, maintenance, and interest, and only becomes a true asset when you eventually sell or rent it out. An index fund is a clean asset. A small business that generates monthly income is a clean asset. The confusion happens when people call expensive liabilities investments because they feel good to own.
Nobody explains that your credit score isn't really about whether you're a good person with money. It's a measure of how profitable you are likely to be to a lender. A higher score means lower risk to them, which is why a good score gets you lower interest rates on everything from car loans to mortgages. The fastest way to build one is also the most boring. Pay every bill on time, every time, and keep your credit utilization low. That's most of the game. Everything else is a minor optimization on top of that one habit.
Inflation is the reason cash sitting in a regular savings account is quietly losing value every single year, even though the number on the screen keeps looking the same or even slowly growing. If inflation runs at 3% and your savings account pays you 0.5%, you are losing 2.5% of your purchasing power every year. Guaranteed, silently, without ever seeing a single transaction that says, you lost money today. This is exactly why just save your money was never the full answer. Saving protects you from emergencies. It does not protect you from inflation. Only growth-oriented investing does that.
Now here's the part that should actually make you a little angry. Not at your parents, not at your teachers, at the system itself. Because once you know these 4 concepts, really know them, you realize something uncomfortable about everyone who came before you. Most of the adults in your life who gave you financial advice were operating on the same missing information you were. Your parents probably told you to get a good job, save what you can, and avoid debt. That's not bad advice. It's just incomplete advice, because they were never taught the rest either. They passed down what they knew, which was limited by what they were taught, which was limited by the exact same gap you're dealing with right now. This isn't a one-generation problem. It's a cycle, and cycles don't break themselves. They break when one person in the chain decides to actually learn the missing pieces and pass down something more complete than what they received. That person could be you, right now, today. You were never given the financial manual. That part wasn't your fault. But you have it now. Compound interest, assets versus liabilities, credit scores, inflation. 4 concepts, maybe 15 minutes of actual understanding, and you now know more about how money works than most people will ever bother to learn in their entire lives.
The system wasn't built to teach you this. It was built to keep functioning whether you learned it or not. So the only person responsible for closing this gap from here forward is you. If today hit something for you, this is exactly why I built the Complete Wealth Bible. 16 guides, everything I'd want someone to hand me before I figured any of this out the hard way. $47. Links on screen, links in the description. Nobody's coming to add a personal finance class to your old high school.
Nobody's going back in time to teach your parents what they never got either. But you know now. And knowing now means you get to be the one who breaks the cycle, for yourself and for whoever comes after you. That's not nothing. That's actually everything.